Right. And it's got it's a very important standard. So whatever the other standards we are referring, this standard, right? Very important standard because once you are learning other standards, there's a direct link with this standard. Example 41, 16, 16 and then 40. We are using 38. There's a direct relationship between this standard. So then as we discussed last week, not last week, 1 week before last, some of the standard, there's a requirement to use this, right? It's a must. Some of the standard is an option. That's a key learning outcome we took from this standard. And then we discussed what are the standards. We are going to scope in and scope out. I hope that you are okay with that. And then we went through the fair value definition. Slowly we wanted to identify what are the key features of your definition, right? So then once you are going through this definition, actually, we have different words. You should have proper understanding about each and every word. Orderly transaction. You have a definition to orderly transaction, and then the market participant and the measurement date. So once you are using this definition without having this standard, it's really difficult to give a kind of a correct answer for case study type question. Right? So then that's what we wanted to discuss in the classroom. Each and every aspect we should have a proper understanding. So then that's why we discuss. Once you are selecting market participant, we know that buyer and seller. That's easy. That buyer and seller should be a kind of independent party, knowledgeable party, and then they should have a kind of a capability to do the transaction, and then willing to do the transaction. We had a detailed discussion about each and every aspect. Are you okay? We discussed that if you are having kind of a paper to ready, if you want to tell your house, that is not a fair value, right? You are having kind of a pressure to get money and do another activity. That is not a fair value. That is not a orderly transaction, basically, right? So then the knowledge. So in Sri Lankan context, knowledge is a really important fact. Once you are having kind of a transaction, most of the transactions they do without having proper knowledge. Proper knowledge about what? About the price, about the conditions, and about the features, after sales services. They don't know about the product. They are just spending. So after experiencing the product, they got to know that we have not taken the correct decision. So it means that in Sri Lankan context, we don't have rationalities, rational customers. So then it's really difficult to get an orderly transaction. So it means that once you are getting your fair value, it should be a knowledgeable transaction. It should be a transaction having buyer and seller with good understanding about the transaction, right? So then if I am drafting a kind of a case study, if I am telling that the buyer is a kind of a person not having good understanding about the outcome, we have to capture this. So then are we getting that price as the fair value? That's the question, right? And then we discuss about fair value is a market-based measurement, not one that is entity specific. It's a market-based measurement. Entity to entity that can't be changed. We have to get from the principal market. A fair value letter, it is not entity specific, person specific, individualized number. It's a market-based number. So that's very important. Here we are discussing about the fair value definition, right? Then again it clearly says that it should be assumed that market participants are not forced into the transaction. Yes, there can't be kind of a foreseeable transaction, kind of a there's an impact, there's a kind of pressure to do transaction. Part of one is surgery. And surgery you want money. So what we're going to do is we're going to sell something. Maybe your vehicle, maybe your property. So at that time, urgently you need money. So then what are you going to do? Whatever the price, I'm going to sell. That is not this is not a kind of rocket science, but if you want to get the fair value, there can't be any further third party or kind of other that would be under force, right? That's a very practical scenario. So then මට පුළුවන් මේක එකතු කරලා ලස්සන කතාවක් හදලා ප්‍රෙෂර් එකක් ගන්න. So what වෙන්න ඕන? So you need to figure it out. I am discussing about this post. Is there any post transaction? There are any push, any pressure to the buyer and seller to do the transaction? You need to figure it out and capture that to the answer. Tell that clearly this is not a fair value because buyer has kind of another pressure to do the transaction. If you are doing it the pressure, we are giving weight to that pressure, not to the market price. That clear, right? Yes. When pricing an asset and liability, market participants consider the characteristics of the asset and liability. Yes, we discussed last week. Once you are giving your price, that's a kind of a reflection about the condition. And what would sit take again, 15% discount. And the discount clear. So they were spoiled. So the condition, right? You need to have an understanding about the condition of the item and the location. We are buying a kind of a item, kind of a maybe kind of a ornament, or maybe you are doing kind of a online purchasing, right? So you are having kind of a very fair price, but you have another cost, shipping cost, and then maybe stamp, maybe duties. So then after getting the location might maybe not cost effective, right? But then a branch establishment, no, rural area. So what interior design party. So then what we are going to do is you are calling quotations. You are getting a good quotation from Colombo. Good price, fair price. But if they are doing the service in a rural area, they may add transport cost. So then you need to evaluate the service with the location and the condition. Are they having experts? Are they having industry knowledge? Are they having proper tools and equipment? So then those things need to be evaluated. ලෙඩක් හොස්පිටලයිස් වෙනවා. ඒකේ ලෙඩ පැෂන් එකක් නැහැ. පැෂන් එකක් ඇති හොස්පිටල් resident වෙලා වැඩක් නැහැ නේද? So then you need to have proper understanding about the capability of the seller and the supplier. Those things we can consider as the condition and the location. Right? Age and the remaining economic life. Age and the remaining economic life. We stopped with this yesterday, not yesterday, last week, we had a detailed discussion about economic useful lifetime and the useful lifetime. This is a clear concept. Economic useful lifetime and the useful lifetime. I hope you are clear about that. Economic useful lifetime was given by the manufacturer of that asset. That's inbuilt. That is common to each and every user. As a given fact. Economic useful lifetime. We need to refer LKS 17 to get that definition. Economic useful lifetime. Useful lifetime is an estimate given by the particular company based on their usage. Right? That's 16. There is no standard. Right? So that we know the exact difference between the economic useful lifetime and the useful lifetime. So then, once you are coming to a transaction, you should know remaining economic useful lifetime. So then the manufacturer has given a 15-year economic useful lifetime. So then this asset, like 12 years, one person has used. We should know remaining, we have 3 years to use. Accordingly, we need to decide the price. This is called fair value. If you are coming to a decision, you estimate this as he has used only 5 years. Only 5 years. According to the condition. So they have come up with a price. You should evaluate that price with the condition, right? So then same way, we are doing the same thing for some of the vehicle purchases, right? What we are doing? We are checking the mileage they have used. It means වාහනයක mileage ටික බලනවානේ purchase කරන්න කලින්. ඒක වෙනස් කරන්න පුළුවන්. ඉහිලා meter එක මොනවද machine එකේ inside ඉහිලා මේ data delete කරලා we can change the use mileage. So then once you are checking this use mileage, what's the thing we need to check? So then if there's a vehicle, definitely manufacturer has given this can be used only for the 500 kilometers. 500 kilometers, right? So then 500 kilometers, if you are done with within 1 year, so there's no economic validity, right? You can use this 500 kilometers within another 10 years. That's based on the usage. Not only the economic useful lifetime. You need to consider the person who used that vehicle, right? For kind of a fair value. So then, if I am the person who draft the standard, I need to add the one item here. What's that? The person who used this vehicle, the perspective, the usage of the vehicle, previous usage. That's really important, right? So then you need to know whether it's used at the Colombo, Srilanka, or the down south. Down south use කරන්න මොකද්ද වෙන්නේ? Coastal region එකේ තියෙනවා ඒක ගොඩක් මේ වෙන්න පුළුවන් නේද? දැන් මේ මොනවාද මූදු අයින තියෙනවා නම් වාහනය ගොඩක් damage වෙන්න පුළුවන්. But you need to evaluate that. If you are purchasing a lot of set of computers which is used in a company in down south. So down south තියෙනවා නම් මොනවද වෙන්නේ? Coastal region එක නිසා computer එකේ ඇතුලේ දේවල් damage වෙලා තියෙන්න පුළුවන්. So then you have to evaluate that and you have to give the price. That's all about the condition, location and the remaining economic lifetime. Those are really important facts, right? And restriction or use of the sale. Is there any restriction for this asset? So then some of the assets can be placed to a kind of a bank, or else there may be some restriction to use that. You should know that restriction. Let's say you are buying a land with the 15 feet road, right? Once you are completing your purchase transaction, you thought that we had 15 feet, maybe 4-meter road. So then finally, once you are checking the deed, we are having only 10 feet road to the land. It means there's a restriction to use this asset. There's a restriction. So then that's why we are telling, once you are buying land or something like kind of a property, you need to clear the ownership. Especially a land, you need to check 30 years backward at the ownership. Right? You need to check that. Whatever the historical ownerships, are they having clear deeds and rights? So then that's all about what? All about the knowledge of the transaction. Having this knowledge, you have to make the deal. You have to do the transaction. ගොඩාක් land ගන්න කට්ටිය මොකද වෙන්නේ? without having any understanding, they quickly purchase the land. So after going through these deeds and all, so then they don't have kind of a clear right. If someone can ask, and if that third party going to a kind of a court and do a kind of a land type of a court case, definitely that will be a kind of a restriction to use. If there's a kind of a court case, we can't do anything for this. Any development, any changes, because it's under court case. So then you may face different difficulties. If you are going for that type of a transaction, what you have to do? We have to capture that to the price. That's all about the fair value. Keep in mind. Keep in mind. These are really important factors. Again, I am repeating: condition, location, remaining useful lifetime, restriction on the use of the scale. Right? So these are given parameters in the standards. Right? And then the measurement date. Price that would be received to sell asset or pay transfer liability in orderly transaction between market participant at the measurement date. What do you mean by measurement date? So now we are discussing about the transaction price as at which date? Measurement date. Not some other date. You have a clear understanding. Measurement date can be maybe a reporting date. It can be kind of a business combination date or the date of transition to SLFRS. So then, some companies, they can do their own bookkeeping, right? If they won't transfer that to the SLFRS and LKSS, at that point, they have to do a fair valuation, right? So if it is so, we have to use that date. And then date of acquisition of asset or business combination. If you are having kind of a business combination as at that date, otherwise it may be a reporting date. It may be a transaction date. So then you need to get the fair value as of the reporting date. Right? Measurement date is really important because with the time you are doing kind of a measurement, let's say 31st December 2024, you are doing the fair valuation. That may change January 15. There may be a significant impact. Right? Measurement date is really important. Now you know that we have 2, 5, and 7 with proper understanding about features of the transaction, location, and other factors, and they are doing the transaction about a kind of a service or kind of an item as at the reporting date. What the exact price you are getting? That's all about the fair value. Right? Now what is the දැන් example එකක් විදිහට මම ගන්නවා නම් let's say you want to buy a hotel, right? So then you are planning to start a business. You want to buy a hotel. Let's say it's not a 5-star, 3-star hotel, small cabana type hotel, right? So then it's consisted with 5 rooms, and the scenery and the beach front is there. So nearby a kind of a jungle, you are purchasing a hotel. So then what is the price you are giving? That's the fair value. So then what you have to know? You have to clear about the structure of the building and the material they have used. Have they used the proper materials, and then location, clearance about the needs, and then any complaints over there. Likewise, you should have a proper understanding. So then, if you can recall your memory with the audit subjects, do you know that the due diligence Because Patidano, intelligence, we are doing acquisition by using intelligence. The reason we should know the each and every element of that contract, any commitment, any liability. So that will be reflected to the price. Once you are doing the transaction, you have to embed, you have to consider that contingent factors. Then only you can get a fair price, correct price, right? So then that's about the definition. That's about the definition. If you are having any concerns, you can ask, right? Now we are going to the measurement basis. How we are going to measure this? That's the critical part. We have three techniques. Today I am planning to complete this SLFRS 30 and SLFRS 8 segment, right? And planning to start the console. That's the plan. 13 plus 8 plus console. Okay, quickly went through this. So then we have three bases for valuation. But we have already discussed the value can be measured by using three bases, three techniques. What is that? Market approach, income approach, and the cost approach. So then how can we measure this? So then these are the three techniques we can use for valuation. Once you are doing your valuation, with the practical aspect, you have to decide the approach. Right? Based on the scenario, you have to have proper understanding about the scenario and decide your valuation approach. So, yes, technique is appropriate in the circumstances, right? And the sufficient data must be available. Maximize use of relevant observable inputs. That's really important. Maximize use of relevant observable inputs. That's why we are telling it's better to use market approach. If you are having proper market data, don't use cost approach. This is the high priority market approach. Why? We have to maximum way we have to use observable inputs. Don't use, if you are having observable inputs, don't use unobservable inputs. It's not good, right? So then you can manipulate that. If you are having observable inputs, priority for what? For observable inputs. So then, best approach is what? If you can use the market approach, this is the high priority. Secondly, income approach. Thirdly, cost approach. You can get from the market, please use that. So then, if you are unable to get the market price, then what you can do? You have to do the kind of a income approach. What is the income we can earn from this asset? And we do need to do kind of a present valuation. And then that price can be considered as a fair value. Cost approach. What do you mean by that? Valuation based on replacement cost. So then we can't estimate the income. We can't estimate the market value. If we want to replace that with some market kind of some other resource, what's the cost we need to incur? What do you mean by that? So then here we have a kind of a swimming pool, right? Let's say it's a hotel company. They are having a swimming pool. they want to pair value the swimming pool. What we have to do? They don't have details about this. Can we sell the swimming pool in the market? We don't have market price. Then what we are going to do? The second approach. We can do that valuation. How many years can we use this swimming pool? Like 45 years. 45 years per day. We are having like 35%. For year, like 300 days, we are giving this for renting out. For 300 days, 35% into 45 years. We can do kind of a income approach discounting method. We may have a figure. This is again a unobservable inputs, right? That can be done. This is one approach. If you can't estimate this, you can't get this 35 as average. You have a seasonal business. You can't predict that. So then what you are going to do? You are using cost approach. What do you mean by cost approach? If you are rebuild this type of a cost, this type of a pool, what is the cost you are going to incur? How much of cost you are going to incur? That may be 4 million. If you want to build up a brand new this type of a pool, you have to incur 4 million, right? And then 4 million for new item. We have used this around 5 years. So then we have to deduct depreciation, right? So then that's called valuation for from the replacement cost. Replacement cost. Once you are replacing whatever the asset, once the cost you have to incur to deduct the depreciation as well, right? That is the last option you can use. And then we can have kind of an assumption. Cost equal to fair value. Cost equal to fair value assumption. You can't do the valuation like this. What you have to do, incurred cost, you assume that equal to the fair value. That is called a kind of a cost equal fair value assumption. So then we do this type of assumption for the industry, the biological asset industry. Let's say boiler birds. Boiler birds. Yes. For boiler birds, we are using cost as the fair value, but we have presumption that cost equal to the fair value. Incurred cost equal to the fair value. We can say that cost approximation method. If you are reading your whatever the poultry industry annual report for consumable biological assets, we have used the cost, but according to LKS 41, if it is a consumable animal, what's the method you have to use? Fair value plus cost to sell. But we can't get fair value plus cost to sell. If it is so, we are using incurred cost as the fair value. Let's say the scenario is like this. Boiler bird, as I said, this bird may in the cage 45 days in the cage, right? As at the reporting date, you can't say that each and every bird ready to sell. So then as at the reporting date 31st December, there may be birds not 45. there may be birds, 20 birds cage and 15 bird cage and 30 bird cage and 45 bird cage. Different cages are there with birds. So then in the market, we don't have a, the fair value, active market for 20 days old birds. 20 days old bird, we don't have a market. We don't want to sell it out. Why? We want to keep that 45 days and with the meat, we are selling out. So then as at the reporting date, we have to measure this. So then for that, what we have to do? We can't get the fair value. So then we have incurred the cost down. So then we have a kind of a estimate that presumption that we can earn this cost as a fair value. That's called cost equal to the fair value. Right? That's the kind of a presumption we can do as a management. Right. This is really important. Technique is appropriate in the scenario. Technique, දැන් වාගේ ඩියුටි එක මොකක්ද? ඩිග්‍රී එක අරගෙන ගිහිල්ලා. මේ ටෙක්නික් එක ඩිසයිඩ් කරන එක තමයි වාගේ ජොබ් එක. මේක බලලා පොතේ ලියන එක නම් ඊසි නේ. මේක අතේ ලියන්න ආව පොතේ ලියුවා එක්සෑම් එකට. ඒවත් නැහැ. නේද? 3 valuation techniques as per syllabus is 30. ඒක කරන්න නම් වාගේ requirement එක ඕනේ නැහැ. ඒක මොකක්ද අපි? නේද? අර සිද්ධාර්ථ කුමාරයන් මාලිගා දුන්නා වගේ. If you are Buddhist, we have got a basic knowledge about Ramme Surame Super. මාලිගාව දැකලා නැහැ, කවුද කිව්වේ දන්නේ නැහැ, ඇත්ත දන්නේ නැහැ, බොරුවක් වුණත් පාඩම් කරනවා. මේක බොරුවක් නෙමෙයි. ඔයාට challenge කරන්න පුළුවන්. So you can challenge that practical. This is standard requirement. So then, if you have the counter, what's the method you have to use? That's your duty, right? That's your duty. Deciding the valuation technique based on the condition, right? What පුළුවන් වෙන්න ඕන කියන්න. The best approach for the valuation is this. And then, after getting that decision, you are the person who need to justify that to the external auditors as well as the finance manager, right? Justification. So then, if you are selecting different technique, the answer may be totally different, right? You can't get same answer. That's why we are telling. You have to use the appropriate valuation technique. That's a must. That's your judgment. And sufficient data must be available. For current data, there should be requirement, right? That requirement, that method should address with the available sufficient data. Without having data, don't start that approach. Or income approach decide no. You don't have income details. How you are going to do the valuation? You can't do that. Maximum use of relevant observable inputs. As I said, once you are getting your decision, you have to, based on the observable inputs, give the priority for observable inputs. Don't depend on unobservable inputs. Right? So then stakeholders always focus about observable inputs. So then those are the basic measurement related guidelines. And then we are moving to, based on this measurement, this criteria, we are doing the valuation. Then we can do classification according to the valuation. According to the classification, we have 3 different levels: level 1 valuation, level 2, and level 3. That purely depend on the inputs we are using for the valuation. Whether we are using observable inputs or the unobservable inputs. Right? Is that a level 1 valuation, level 2, level 3 will be decided based on the method we are using and the inputs we are using for the valuation. It means if you are doing level 3 valuation, you have a lengthy disclosure to do. Why? Level 3 valuation always depend on the unobservable inputs. So then level 2 valuation, observable inputs not identical to that asset. It may be a similar asset in the market. The particular asset we don't have a market value, but identical similar asset we have a market value. We are using that asset value and we do the valuation for the particular asset. That's called level 2 valuation. Level 1 valuation, whatever the asset having identical active market price. Identical active market price. So that's called level 1 valuation. If you have kind of a scenario to do this level 1, level 2, level 3, you have to have proper understanding about the inputs they are using for the valuation. It's a highly possible area in the exam paper. Decide the level of the valuation. Level of the valuation. All එකක් use කරන්න all the valuation agricultural or whatever the land, building, tangible asset, business combination, or whatever the asset you are doing the valuation, evaluate that and give the level. Level 1, level 2, level 3. So level 1, level 2, level 3, set and what how we are going to decide it? Based on the observable and unobservable inputs. Here. It is better to come around there is big bus and a product. Power and CV come in. One important standard. Again, for whatever the other standards required. So once we are doing your evaluation, biological assessment, whatever that standard you are correct. Very important. Whatever the annual report you are doing, level 1, level 2, level 3, then level 1, level 2, level 3 is being decided based on the valuation technique and the input value. Value the part so if it is a market value, or kind of calculation, or kind of insight, type of information, all those things will be considered for this classification. That's really important, right? Level 1, level 2, level 3. So in the Sri Lankan context, level 1 will be used for only for this stock market. Other than that, we don't have active markets. Quoted price. Quoted price means quoted price. Quoted price means identically we have given the price that will be changed live in the live market. It's active market. That's called quoted price. We have given a price in the market and this time that is a kind of a quoted market price identical to that building, that asset, that share. Here we don't have a kind of active market for the land and building and vehicles. We have just a market, not an active market. We don't have a quoted price for that vehicle, that building, that land. But for share, for that share number, we have a price. You can go to the stock exchange website. Now you can get the price for identical for that asset. That's called quoted price. So it means once you are doing fair valuation, only you can use the level 1. Most of the cases you are doing level 2 valuation. Similar asset may be there in the market. You are based on that asset and you do the valuation. You are doing kind of a land valuation. What you are going to do? So similar land in that area, purpose values this. You are referring to one hotel and other broker sites and a kind of a given valuation from the government. All those things can be evaluated and then you can decide the similar asset price. Similar asset price and give a weightage and do the valuation of your asset. So that is called level 2 valuation. Level 3 valuation. What do you mean by that? Level 3 means you don't have active market. You don't have a similar asset in the market. What you are going to do? You are going to do kind of a fair valuation. Fair valuation kind of a estimate about the cash flow pattern. That is called level 3 valuation. So then this could include cash or profit forecast using entities' own data. Entities' own data, not observable data. Right? That's why it's level 3. But here, quoted price, similar asset in the active market. Similar asset price. We can see in the active market, but it's not identical, right? Not identical, it's similar asset. Quoted price for identical asset, less active market. Observable inputs that are not prices. Observable inputs that are not prices. To do the fair valuation, there may be many inputs, right? So then risk-free rate or the whatever interest rate, inflation rate, or those things can be taken from the market. And those things we can see in the market, but those are not identical, right? Active market or less active market. Quoted price for identical asset in less active market. That's okay. Less active market. But in the market, we can get that price. This is really important. Gold market. Gold market level 2. Not level 1. Gold market. Good question. Gold market. But you know, පවුමක මාලයක් නේ. වාරම් තරම් වටින්නේ නැහැ. මාලේ වටිනවා ඊට වඩා. හරි. මාලේ මොකක්ද ප්‍රයිස් එක? එයා නිදි ලෙවල් එක මොකක්ද කියලා දැන් මට තේරෙන්න ඕන. දැන් ඔයා බලන හැම එකේම ලෙවල් එක තේරෙන්න ඕන. Level 1, level 2, level 3. It's a level 2 valuation. Gold. Yes. Why? We don't have active market. ඔයාගේ මාලෙට දැන් මේ ස්ක්‍රීන් එක ඔයාගේ මාලේ නම වැටිලා identical ID එකකුත් එක්ක prices යනවද? We don't have this kind of a market. That's called active market. We don't have that. So then similar prices are there. We know that this much of a gold lot, this much of a value. So then we have kind of a market price and then mortgage price. Different prices are there in the market. You can refer that. So that is kind of observable input. What can it done nowadays? Type of a gold item with kind of a working or something like that. This much, or kind of a pure gold type of a bulk gold amount. If you take this much, so we have a kind of a price. If it is so, we can give that level 2 valuation, right? Level 2 valuation. So the similar way, you need to have kind of a, the ability to decide this level and observable inputs as an accountant, as a finance manager. That's the requirement, right? Okay. The really important facts, right? A significant judgment tool, level 2 input, would lead to it being categorized as level 3 inputs. What do you mean by that? You can see this type of assets are in the market. You can observe, but once you are changing that price to your asset, you have a significant judgment. If it is so, you have to change that to the level 3. What do you mean by that? You have a private hotel, right? Private hotel having 50 rooms nearby Kalutara, the private hotel. You want to fair value this. What you are going to do? whatever include. Similar asset nearby Kalutara is a Tangerine. Tangerine and Royal Palm. Tangerine Hotel is the listed company. Listed company. So then, as a listed company, as at that reporting date, we have a fair value. Fair value at that date. But Tangerine Hotel having 75 rooms, but we are having 50 rooms. Tangerine Hotel is a kind of a hotel chain, Ondachi family, right? And then Tangerine has a kind of a brand name in the market. So then we have different factors. The fair value of the share, 200 rupees, one share price. So then we have a similar hotel. We have a similar hotel. Based on this similar hotel, we have a share price and we have a PE ratio. PE ratio, price earning ratio. एक වෙනම lesson එකක් අපි උගන්වනවා. ඉස්සරහට කරන්න ඉංග්‍රීසි. දැන් කරලා ඉවරයි. Already we have discussed and we have completed. Right? PE ratio. PE ratio, market price per share, EPS, earning per share. Right? So calculate earning per share 20. PE ratio 10. PE ratio 10. That PE ratio can be used for here. Here, we know the earning per share of this 50 room company, EPS. We have EPS. EPS here 12 equal market price. The PE ratio in the market 10, earning per share 12. So then you can get the market value of the share of this company. That market value, let's say 190 per share of this company, private limited company. This company share price 200, this company share price 190. But as it is, we use this PE ratio. As it is, we use that PE ratio for here. But with the qualitative factors I said, like brand name and the group and the listed regulatory aspects, all those things should be evaluated, and we need to add a kind of a weightage. It may be 3 or 5. This is the judgment. It's a significant judgment. The difference between two hotels, 50 rooms, 75 rooms, the name and the area and the location, the view, everything should be considered and put a weightage to this PE ratio. That weightage based on your judgment. If you are taking kind of a significant judgment, that fair valuation may be level 3. You can refer to the market price, but you have a significant judgment here. So then that can be justified as a level 3 valuation. So that's the real meaning. You have a similar asset in the market. Once you are using that asset value to your contest, you are putting kind of a judgment, you are putting kind of a loading. That loading may change your number. If you are changing drastically, that number is a level 3 valuation. Right. So this is obvious, right? Last sentence, really important. As I said, you have to give the priority. We give the priority for level 1 inputs, observable inputs. Other reason, we have level 1 priority level 1. Why? We are having more observable inputs, right? So then, more observable inputs mean as the stakeholders, they can take proper decisions, right? They can take proper decisions. So then those are the basic guidelines about levels of the evaluation. So these are the examples. Equity share in a listed company. That's level 1. Build it, head and use level 2. Cash generating unit level 3. So then, as we explained, level 2 inputs, we can get that from the market, observable inputs for similar assets. Level 3, it's a forecast, kind of a model based estimate. That's why we are getting is a level 3 valuation. So this is the way you need to design. So in the exam, there may be several assets. You have to decide the level, right? But exam paper එකක් right? So this is a possible question, right? Yes. List the related disclosures and measurement level for each financial investment as per the syllabus 30. Right? That's possible question. And you will see this. Exam again. And we have a Gandala, validation, Gandala. Make a that list the related disclosures and the measurement level for each financial investment as per syllabus 30. So then as per the given facts, you need to do the fair valuation. We have listed shares, listed debentures, treasury bond, trade debtors, and fixed deposit and treasury bills. We need to get the value. Measurement basis should be evaluated. Identify the financial investment category as per the financial reporting framework. category should be identified. Which category, right? And then suggest measurement basis in statement of financial position as of this date. It's required to mention the value to be disclosed. Let's say one of the value of the pen and kilo decide. Right? Accordingly, for this you use fair value, right? For that we are using observable inputs or unobservable inputs. Accordingly, we need to decide the level as per LFRS 13. Right? So then this type of questions can be tested in the exam. This type of question maybe we are the evaluation technique, evaluation method level can be tested in the exam. Right. So then gold prices, we don't have identical asset price. We don't have defined assets. Identical for that asset. We are having every asset unique price. So then we have share number. For that share, we have price number. Gold, we don't have that identity. We don't have identity. Like cash. Can you go through this question? Discuss whether evaluation technique suggested by the director complies with LFRS 13. Director can comply with unlimited has an investment property. Investment property. What do you mean by investment property? The property we are having capital appreciation or rental purpose. The investment property, right? Investment property. And as to the management view, what's their suggestion? The director wishes to fair value the property by estimating the present value of net cash flows that the property will generate goes unlimited, right? They argue that this best reflects the way in which the building will generate economic benefit for this unlimited. And for the candidate, this is the best way we can use to do the fair valuation. This is the core earning outcome, right? The building is a unique asset, although there have been many sales of similar building in the local area. What's your technique? Now you are having a kind of a decision to decide your valuation technique. What do you think? What do you think? As a property, anything related that use the technique. In some cases, for the valuation, then you can enter valuation to valuation, then it's clearly said. And then, again, there is that the building is unique, although there have been many sales of similar building in that area. So they must be approach you have to use for their valuation. That's the request. So what we are going to do is you need to justify, you need to mention your justification. So then 13 is going to come to our judgment in the piano valuation name. Wow, number up in the back. So then you should have a proper understanding why you are using this method. Here we are discussing two methods. What's that? Huh? So the income approach and the market approach. Management telling that to use level 3 approach, but there's a level 2 approach. So then what's the priority? To the level 2 approach. That's the most observable data, right? You can mislead this. It can. So the investment property, if you have a higher gain, that can be transferred to the P&L. Investment property fair value gain, where we are keeping in the OCI? No. In the P&L, today. OCI is PP&E. The perspective, capital appreciation, because of that we are keeping whatever the gain in the P&L. That's why we are trying to do this calculation. They can manipulate that, right? They assume that this building can be rented out for this price. So then that price and what we had to convert profit. That's the reason they are promoting this. But if we can stick with the market price, that's obvious. Observable input we can use for your evaluation. Right? That's a judgment we need, right? From your side. Here we have the answer. The direct estimate of future net cash flow that building will generate is a level 3 input. So FRS 13 gives lowest priority to level 3 inputs. Right? This should not be used if a level 1 or level 2 input exists. That's really important. If you have level 2 and level 1 inputs, don't go to level 3. Don't recommend a model, a cash flow forecasting model. Right? So the examiner can test this point from you. Then keep in mind, don't promote, don't recommend cash flow type of a model. You have level 1, level 2 inputs. Level 1, level 2 inputs can market value of similar market price of don't recommend the cash flow forecast model. Why? You are using cash flow forecast model, it's unobservable. We can't show that to the stakeholders. You can manipulate that. That's why there's a kind of a clear direction is there. So 30 megahertz මොකද කරන්නේ? Board එකක් දාගෙන value එකක් ගන්නවා. So they are keeping that asset in the books. And the stakeholders they can't take it. Here we have a strict guideline. If you have observer data, please use that. Don't deviate from that. So that's the requirement. As auditor, you need to audit this, right? It's a kind of a clear judgment. So then this is again a good factor as we discussed. So then we have similar prices, right? Similar prices. See, these prices with adjustments. With adjustments made as necessary reflect this specific location and the condition of some limited building. Why? We have similar prices, but to particular asset, you need to change that price. To change that price, you have to have some more adjustments, judgment. You have to put high value or low value. Let's say we have similar price, but compared to that price, we have this benefit. But here we are having this unlimited nearby the road. Then you require some more value. ඒකට එහා පැත්තේ ATM එකක් තියෙනවා. ඒකට එහා පැත්තේ තව මොනවා හරි coffee shop එකක් තියෙනවා. ඒකත් අපිට ඇඩ් කරන්න පුළුවන් value එක. Right? So then view එක හොඳයි. So then we are having a good view. It may be seafront or the maybe kind of a නැත්නම් අපි හිතමුකෝ මේකට එහා පැත්තේ පන්සලක් තියෙනවා. ඒ house පිරිදාගෙන තමයි ඉන්නේ. ඒක හැම කෙනාටම හොඳ වෙන්නේ නැහැ නේද? දැන් ඉන්න කට්ටිය ඉන්නවනම් එහෙම අමාරුයි. full display කරනවා ඒක ප්‍රේම කියන්නේ පාසල කියලා කියන්නේ නැහැ. අන්තලන් එහාට කියනවා නම් අමාරුයි මේ it depends. So then the value may be impacted. So then you have to change that price according to the specific location. You need to make an adjustment over there. Okay. Then basically these are the area. These are the decisions you have to take once you are doing your evaluation. First, you need to decide the asset. Is that a specific asset or combination of assets? Standalone, TP, financial asset. एक asset take up the, this is CGU, cash generating unit take up the. So CGU, cash generating unit take up the, it's a business take up. That a business, it's a combination of asset or one asset. Now you are going to do a evaluation. These are the three questions you are struggling. Are you going to do a fair value for specific asset or you are going to do the fair valuation for kind of a bulky kind of a group of assets. Group of assets means a business, it's a cash generating unit. You need to decide it first, right? And then which valuation technique you are going to use? Market approach, income or cost approach. We are giving the priority to market approach, right? And then decide your inputs. Decide your inputs, observable inputs or the unobservable inputs. That's about evaluation, right? That's about evaluation. These decisions should be taken by you. Be taken by you. And then I'm going to do, how we are going to do the fair valuation, right? Market valuation. So then once you are doing your market-based valuation, what are the things you need to learn? Now I am going to discuss that. That's also very important fact. Right? Once you are using market details, market approach, what are the things you need to consider? මේක තමයි exam එකේ common ප්‍රශ්නයක් විදිහට අහන්නේ. So this is the exam type questions. මේක slide එකේ නෑ කියලා දැන් ප්‍රශ්නයක් ඇවිල්ලා ඇති slide එකේ තියෙනවා. තව slide එකක් update කරා මම මේ pages දෙක විතර add වෙලා තියෙන්නේ ඒක add කරගන්න. So I wanted to add some question to the slide deck. I uploaded to the LMS as a updated slide, right? So these two questions will be there in the slide deck. ඒකට ඔයා හිතන්නේ මුළු අර ඉස්සරහා තියෙන slide එක ආයි print out දාගන්න ඕන කියලා. මේ pages දෙක විතරයි add වෙලා තියෙන්නේ, right? I wanted to add some, questions to the slide deck. So that now I am discussing how we are going to decide your market value. So then we are having different markets and we have a different concept behind what we mean by a market and maybe physical market or most advantageous market. How we are going to get the market value? How we are going to decide that as kind of a critical aspect, right? Principal market and the most advantageous market. Better to read this last note. Most advantageous market is in only using the absence of principal market. That's really important. The most advantageous market is only using absence of principal market. So then, as a accountant, as a stakeholder, as a auditor, once you are taking your decision about fair value, if you are getting a kind of a market price, you have to give your file to what? To the principal market. To the principal market. So then, what you mean by principal market? Here we have definition. Market with the greatest volume and the level of activities. So then, for evaluation, we have to use the principal market. This is the core learning outcome of this standard. Again, standing and market together. Right? And again, we continue to the other. Principal market action. That one is and if you have three values technique. First, market value, income, and cost. Once you are doing market valuation, but the market price you have to get. The different markets in the country, right? What the price they put on 50 per the target is very one vote is in government is so we have different markets. Okay. Can go to the near harbour or to the supermarket or to the whatever the Sunday fair or any place you can get them. It's not price. So then, what's the price you need to get from the market? What's the definition for market price? That's what we are discussing here. To decide that price, we have two markets. First one is the principal market. Second one is the most advantageous market. Principal market and the most advantageous market. That's very important. Take the mic channel again. Ahanne, what decide the run market value based karna. For this asset, this is the principal market. This is the most advantageous market. Accordingly, we have to get the price and then decide your fair value. Market price, yes. Market to market, the price may be changed. But once you are doing your fair valuation, that fair valuation should be common. We have already done that. A fair valuation can't be specific to an entity or a person. Should be a market-based approach. But once you are going through in between markets, you have different prices. So then, in one point you will start, right? You may have different prices. For that, we have clear guideline. Once you are doing your market price-based valuation, you have to use the principal market price. Principal market price. And I don't know, mating market taking marginal price and I don't know. The market with the greatest volume and the level of activities, the number of sales, the overall turnover can be used to decide the principal market. The principal market is a kind of a decision you have to evaluate. Principal market, right? And then most advantageous market. If you don't have a principal market, some of the items you can't see. You don't have a principal market. You can't measure this volume and the activities. You may have different markets. At that time, you have to decide what's the most advantageous market to your company. Right? So then, once you are getting that decision, you need to consider the net outcome to the organization. The market maximize the amount to be received to sell or asset, or minimize the amount that would be paid to transfer liability after taking into account transaction cost and the transport cost. Transaction cost and the transport cost. So once you are dealing with the markets, once you are considering transaction cost and the transport cost, what's the benefited market? You have to evaluate to your organization. So then the most advantageous market may be specified to your organization. Right? You have to evaluate that by considering transaction cost and the transport cost. So then you need, after evaluating both two factors, you have to decide what's the most advantageous market. You may have different market A, B, and C. After evaluating net gain to your organization, you are going to decide most advantageous market to your organization. In the meaning of the word, it clearly says that most advantageous market to your organization. You have to decide that. By selecting that market, then you are starting your evaluation. And then this is the important factor. Make a exam again. Critical factor test करना. Once you are deciding your most advantageous market, you have to consider both transaction cost and the transport cost, right? To decide your most advantageous market. But after selecting your most advantageous market, the second step is by using that values, you have to calculate the fair value. Once you are calculating your fair value, don't use the transaction cost. That's the point during the this is a complex area here that can be highly possible to test in the exam. Here's that we have to base on principal market. If you can't decide the principal market, you have to go to the most advantageous market. Once you are deciding most advantageous market, your selling price should be deducted these two items, right? So then, after selecting most advantageous market, third step is to calculate the fair value. Fair value is the selling price relating to whatever the other transport cost, not transaction cost. Once you are doing your fair valuation, don't use transaction cost. Use the transport cost only. So you should ask why you are telling like that. The transaction cost is part of the transaction. No. Transaction cost can be manipulated. Transaction cost depend on the transaction, not depend on the asset. Transaction cost is not unique to the asset. That depends on the transaction to transaction. It's not part of the fair value. Not part of the fair value. If you have allowed to use the transaction cost, and then way out take a play around if as per SLFRS 13, if we allowed to use the transaction cost as a deduction from the fair value, that is the area you can use for playing with numbers. They can manipulate. Why? We want a fair value of asset. To that asset, the transaction cost is something else. It's not identical to that asset, that transaction. But transport cost is part of that asset. To sell this asset, transport cost it's obvious. It's part of that asset. Right? Then we argue for us. Transport cost if you are using a train or air flight or something like a kind of container, the price may be changed. But in normal scenario, අපි මොනවාද ගඩොල් වගේ දෙයක් ප්ලේන් එකේ ට්‍රාන්ස්ෆර් කරන්නේ නැහැ. We have a basic kind of a common understanding about the transport mechanism that's inbuilt with the asset. That's inbuilt with the asset, the transport cost. So that's the difference, right? Basic and standard. You have to know. Someone asked from you, here there are two transaction cost and transport cost. So let's see, starting from T, both transport and transaction. But you are getting transport cost, you are getting You are getting transport cost, you are not getting transaction cost. What's the logic behind that? That's the question you should answer. That's the justification which is the audit committee. And whatever the marketing team and whatever the engineers and the doctors, you all counted. You should have a justification for that. Right? Okay. So shall we do a question quickly? So then this is the yes. The most advantageous market determined from the perspective of the reporting entity, right? Perspective of reporting entity. Access as at the reporting date, yes. And transaction costs are taken into account in establishing the most advantageous market, but not measuring the fair value. Right? This is what I discussed here. මේක තමයි අද පිළිගන්න ඕන. පාට කරලා මල් දාලා තරු දාලා මාක් කරගන්න ඕනේ මෙන්න මෙතෙන් එනකම්. මෙන්න මේ ඩොට් එක ගාවට. හරි කියන්නේ. Transaction costs are taken into account in establishing the most advantageous market, but not in measuring the fair value. That's really important. That is the sentence which we tested in the exam exactly. If you know that, you have 10 marks. First sentence second. Transaction costs are taken into account in establishing the most advantageous market, but not in measuring the value. That sentence is necessary. ඔබ ලියාගෙන හරි එන්න ඕනේ. ලියාගෙන ඉතින් වැඩක් නැහැ. ඉතින් ස්ටඩි එකට ඇප්ලයි කරන්න ඕනේ. හැබැයි ගන්නවනම් very easy. Very easy. We don't have yes no answers. So we have yes no answers, black and white answers. We don't have gray answer. Exactly, you can give the exact answer. Presumption that principal market is the one which entity normally transacts. So once we are doing this activity, we have a kind of a presumption that we have a principal market. That's the market we are having more transaction, right? That's the largest market in the country. So we assume that as a player, as a kind of a market participant, majority of the transaction will be done in that market. That's a presumption. That's a presumption, right? Anyone, please calculate this. This is a question. Example. We have two questions here. What's the fair value? They wanted to calculate the fair value. If market 1 is principal market for the asset, no principal market can be determined. Two scenarios, calculate the fair value. This is a question. The basic question. You can try this. First one and second one. If a market 1 is the principal market for the asset, if no principal market can be determined. Calculate the fair value. So, market, if the market, first thing the principal market for the asset. So, once you are doing your fair valuation, you have a question to do the fair valuation. We have three techniques: market value, income base, cost base. Here, question clearly says you have a market values. Option. So then, now you have market. Now you have two questions. Is there a principal market? Or if not, you have to go to the most advantageous market. So then question one clearly says, market one is the principal market. Principal market is market one. According to the market one details, what's the fair value? What's the fair value? Price 26. Transaction cost -3 and transport cost 2, right? So then we are not getting transaction cost, we are getting only the transport cost 2. That's about 24. 24 is the market fair value. Principal market. Yes. Yes. principal market is market one. Price 26. Transaction cost. Yeah, transaction cost we have get from that market. Right? So we assume that we are doing most of the transaction in the principal market. If you are having principal market, right? Principal market means we have presumption, right? Presumption that if we are having a principal market, as a player in the market, we do most of the transaction in the principal market. That's a kind of a presumption. Presumption that based on that, we have the price and the transport cost. To go to that market, most of the transaction we have this much of transport cost. Is the answer? So then, question number two. You don't have principal market. Then What you have to do? You have to decide. Again, you have to decide. What is the most advantageous market? Most advantageous market. Once you are deciding most advantageous market, you have to decide both. Right? So then අපිට මේ market දෙකටම යන්න පුළුවන්. ඒ කියන්නේ එහෙම ලොකු market එකක් කියලා දෙයක් නැහැ. So then both are similar. We can't specify that this is the principal, this is the principal, right? So the both are same. So what we have to do, we have to decide the most advantageous market. Most advantageous market, obviously, market 2. Why? Market 2, the market we are getting more return, 22. 22 we are earning from market 2. Market 2 is the most advantageous market. Reason as an entity we are earning high value. The RS 22. Market 2 is the most advantageous market because as an entity we can earn high value after deducting transaction cost and the transport cost. Right? Then fair value is 25 deducted by 2, 23. So then once you are deciding fair value, you are only deducting these 2. You are not getting transaction cost. So then based on 2 assumptions, the value may change. Here 23, here 24. Based on your judgment, based on your selection of principal and most advantageous market. Right? Can you quickly do this one? This question? So then here we have question. Exam time question. But shall we try this? This is an exam question. Yes, better to do this. We have 2 products. Product 1 and product 2. We have to decide what is the principal market, what is the most advantageous market, and decide your fair value. Product line 1 we are having 100,000 units. Product line 2, we have 500 units. Right? Product line 1 and product line 2. Quickly do the question. Most of the is product line. But then elementary level Yeah, they have given the fair value of inventory acquired. What they have done is product line 1, they have multiplied 100,000 into 340. 340, they have used Europe market, right? And then product line 2, they have used the higher value, right? What they have done is they have used the highest value. From 3 market, 335, 340, 390. They have taken 340 for their valuation, right? 2 markets, 2140, 2. Two two four zero. They have used 2240 into 500. Easily, they have used the highest value for their valuation. You need to instruct, you need to advise them as per SLFRS 30 how we should do this. Right. Right. Product line 1. Product line 1. We have 3 markets. Asia, Europe, and Africa. So then, sales volume in previous 12 months. Sales volume. What do you mean by that? Activities. What is the principal market? Obviously, Asia is the principal market. Asia, not Europe, not Africa, because the highest sale volume. Then If you have a principal market, don't worry about the most advantageous market. Get that price. Get that price. So then selling price 350. Selling price 350. How many number of items? 100,000. And the transport cost 5. Fair value 350 minus 5 into 100,000 is the fair value. Product line 2. Product line 2. So then sales volume wise, similar. Can you all see this? 10,000 and 10,000. 10,000 and 10,000. We need to clearly say we don't have a principal market. We don't have a principal market because the sales volume are same 10,000. We don't have a principal market because the sales volumes are same 10,000. Then we have to identify the most advantageous market. Then we have to identify the most advantageous market. Accordingly, Africa. Most advantageous market is Africa, right? Yeah. So here we have the channel. So as per LFR is 30, right? So then this fair value differs with this fair value. The exact fair value we have to put in the financial statement, and then it's a level 2 valuation, right? The level 2 valuation. Here we are not discussing about the active market, right? Just a market. I hope you are clear. Then again, here we have a similar question. A countries තුනම තමයි අහලා තියෙන්නේ. Format එක වෙනස් කරලා තියෙන්නේ. Sales price per vehicle, volume, total volume sold vehicle in the market. So then very easy question, right? How about this question? Give two examples for level 3 valuation as specially for 30. Give two examples. And related unobserved inputs should be disclosed. Right, that's about market valuation, right? So then these are bit related concepts. Once you are getting your SLFR is 13, market price. In the market, we may have bid price and ask price. Bid price and ask price. Selling price and the buying price. Right. Selling price and the buying price. Selling price, the price we are bidding. Ask price, buying price. Right. Selling price and the buying price. Ask price and the bid price. So what is the price you have to use? Whatever the liability, you have to use ask price. Whatever the asset, you have to use bid price. What do you mean by that? Ask price and this bid price. You have an asset, you want to sell it. So then, what the price you have to use? You have to use bid price, because you have to use the selling price. You have an asset, you are going to sell it, right? And then ask price. If you have a liability, you need to uh, settle it, and then you have to purchase something, right? Ask price. You need to purchase means, let's say you have foreign currency. You have foreign currency, you are going to do the fair valuation. You have some foreign currency asset. So then what you have to do? You have to get some other asset or LKR. For that, what you have to do? You have to use that to some other party. You need to sell it. If you have a liability to settle by using foreign currency, so then you need to buy foreign currency. You need to ask some foreign currency from some outside. Then ask price. If you have a liability, ask price. If you have an asset, it's price. Right? And then 13 says clearly, don't use a bid price. Don't use a mid market price. Some of the guidance are there. You can use kind of average price. Ask versus bid. You are accumulating and dividing by 2. You are using kind of a average price. It is prohibited from the standard. You have to use the exact price based on the asset or liability. Right? Right. So then the other guideline, other pricing conventions that are used by market participant as a practical expedient for fair value measurement within a bid and ask spread. So then in the some of the decision may be taken to value bid and ask spread in between. Bid price may be 250, ask price may be 230, ask bid spread means 20. In between, they do transaction based on this price. If it is so, you need to decide carefully what the bid price and the ask price. Some of the transactions they have taken decision based on the bid ask spread. But don't use that average prices, right? You have to exactly use the correct bid price and the ask price. Non-financial asset. So then the evaluation can be done for financial asset or non-financial asset. Financial asset. Financial asset can what? Financial asset, non-financial asset. Financial asset can be divided into three, right? Financial instrument can be divided into two: financial liability and financial asset. Financial asset means it's asset we have a right to receive cash. The financial asset. Financial asset may be derivative, debt instrument, or equity items, right? Or else we may use this standard for non-financial asset like PPME, IP, biological asset. So we learned that intangible asset, yes. The guideline clearly says we are using this for non-financial asset. You have to focus the highest and best use of the asset, not the current usage. You have to focus the highest and best use of the asset. It's a clear guidance given from the standard. Highest and best use. මේකත් mark කරගන්න ඕන වචනයක්. Highest and best use. Not the current usage. So then you may have a small, bare land nearby the city. Now you are using for car park. earning some rent income, right? But there's a high possibility to do kind of a apartment here. So then highest and is to the fair value. Fair value should be based on the highest and best use, not the car park income, right? The best use may be some other thing. Because of a kind of a limitation, you can't do it. But the fair value is not a person specific value. It should be a market value. That's the basic guideline. Because of that, you have to consider the highest and best use. Right? The highest and best use of an asset is the use that the market participant would adopt in order to maximize its value. That's really important. To get the highest and best use, there should be a capability. That capability can be measured by using physically it should be possible, legally permissible, and financially feasible. Otherwise, we can't do as a highest and best use. That should be a high possibility to get that. Accordingly, we can decide highest and best use return for their fair valuation. Here we have a question. Read that and try to give an answer. Highest and best use, but not financial asset. Star has purchased 100% of ordinary shares of Moon and is trying to determine the fair value of the net asset at the acquisition date. They have purchased 100%. They are trying to value net asset at the acquisition date. Moon owns land that is currently developed for industrial use. Moon owns a land that is currently developed for industrial use. Okay. The fair value of the land, if used in a manufacturing operation, is Rs 5 million. Many nearby plots of land have been developed for residential use. The high-rise apartment buildings. The land owned by Moon does not have planning to permission of residential use, although permission has been granted for similar plots of land. The fair value of Moon's land as a vacant site for residential development is Rs 6 million. However, transformation cost for Rs 0.3 million would need to be incurred to get the land into this condition. Right? How should the fair value of the land be defined? So then this is a question can be tested in the exam. You need to decide highest and best use. So then for manufacturing purpose, fair value is 5 million. 5 million manufacturing purpose. Other purpose 6 million minus 0.3. Transformation cost is not a transaction cost. 5.7 million. What is the fair value? According to the scenario, given detail, 5.7 million is the fair value. 5.7 million is the highest and best use. So here we have the explanation. I've given the explanation here. Land is a non-financial asset. Syllabus 13 says the fair value of non-financial asset should be based on the highest and best use. This is presumed to be its current use unless evidence exists to the contrary, right? The current use of the asset would suggest a fair value of 5 million. The current use of asset giving fair value of 5 million. However, there is evidence that market participants would be interested in developing the land for residential use. The residential use of the land is not legally prohibited. Similar plots of land have been granted planning permission. So it's likely that this particular plots of land will also be granted planning permission, right? It's used for residential purpose. The fair value of the land would 5.7 million, 6 minus 0.3. It would seem that the land's highest and best use is for residential development. Its fair value is therefore Rs 5 million. This is the answer required in the chat. So then we have very small numbers. There's no arithmetical, the complex calculation. It's a matter of deducting, but you should know the logic, and this explanation is the must. Right? Highest and best use. I think all done now. Yes. The standard of and the basic definitions and the basically fair value definition. We have every word of the fair value definition and fair value techniques, fair value levels, and basically from fair value techniques, once we are getting market value, advantageous market and the most advantageous market, and ask price to bid price, and then what's that? Highest and best use, and then that's the disclosure. Disclosure is a very lengthy disclosure. It has to whatever the standard you are using, say for 30, you need to comply with this information. Right? And then basically method, once you are doing fair valuation, method used to the fair value, measurement basis, and unobservable inputs, observable inputs, as well as the OCI or P&L impact. You need to separately disclose. Class of asset and the level of fair valuation. Quantitative disclosure about the unobservable inputs. Quantitative disclosure should be given. And description about level 3 valuation process, policies, and procedures. If it is a level 3 valuation, it's unobservable inputs, right? We need to clearly mention the process, policies, and procedures we use to do the fair valuation. That's very important. Narrative description of sensitivity change in the unobservable inputs for recurring level 3 measurements, including interrelationship between inputs. That's really important. The very critical disclosure, sensitivity analysis. If you are changing 1% of one input, what's the impact to the P&L? What's the impact to the total asset? sensitivity, right? And then interrelationship. If you are using three unobservable inputs, if one unobservable input getting changed, is there any impact to other inputs? You need to mention that as well. So then sensitivity analysis of unobservable inputs is a really important disclosure. We want to see that from annual report. So this is a disclosure, right? Biological asset valuation technique. See? Type valuation technique, significant unobservable inputs, interrelationship between key unobservable inputs and the fair value measurement. Key relationship between key unobservable inputs and fair value measurements. So that's the requirement. So then they have given a disclosure over there, but they have not given the exact information, right? Fine. With the competition, they are not ready to disclose that. So then, obviously, mortality, the hatchability, egg production rate, we know that if it is increased, IRR will decrease. That's obvious. If it is decreased, IRR will increase. No need to disclose that. Come on. No need to disclose that. So then they all take selling price, increase selling price, increase when selling price increase. Obvious. No need to disclose, but they are supposed to disclose this here. What's the percentage will it track? They are pretty disclosed, right? It's the competition. If they are disclosing that, this will use other competitors. That's why they are not disclosing this. Otherwise, there should be kind of a pure sensitivity analysis with the other information, right? So then you're supposed to do this in your future. That's why you are learning this, right? If there's a request from your CFO to do kind of a sensitivity analysis, first reference again, you are doing fair valuation. This is the disclosure you're supposed to give. If you are a chartered accountant, once you are doing annual report marking, there are many marks for this disclosure. Sensitivity analysis disclosure, right? So then that's all about fair valuation. Fair value standard is very useful standard. Definitely 15 marks for exam. I hope that you are okay with the content. We had a long discussion. So then I will give some more questions on this. I want kind of a good, knowledge, practical aspect from you all to, to shape your knowledge and whatever the company you are going to account is a really important standard, right? If you are in banking sector, you may not be do LKS 41. If it is a private company, you may not do segment analysis, right? Consolidation, you should have kind of a group to do consolidation, right? But fair valuation is standard. It's a common standard, right? So then you have to equip with whatever the requirement. Basic scope, techniques, measurement basis, levels, disclosures. Those are the areas you need to focus. Right. I'm going to start syllabus 8. Segmental analysis. Syllabus 8. Segmental analysis. Segmental reporting. Segmental reporting තමයි standard name. Operating segments. Segmental analysis, segmental reporting, operating segment. So that's the important standard for listed company. You are accountant or finance manager or auditor for listed company. The entity having listed financial instruments. This standard is a must. Operating segment should be identified and operating segment should be evaluated, and as accountant you have to decide what are the reportable segments. So then two words we have to focus in operating segment versus reportable segment. This is what this first is standard. Operating segment versus reportable segment. You have to decide as accountant what are the reportable segments. We are having operating segments. You may have many operating segments. Then, as accountant, you have to decide what are the reportable segments for financial statement users, with the significance, with the relevance, after analyzing all the things, we don't need to fix it operating segments, but you need to decide what are the reportable segments for it's relevant for stakeholders' decisions. To get that guidance, standards clearly mentioning the proper guidance, how you are going to do that. So that process should be learned by you. How we are going to identify operating segments, what are the operating segments, and then you need to have kind of a aggregation criteria. If you want to aggregate some of the operating segments, you can do that, right? And then use quantitative threshold and decide reportable segment and do the disclosure. That's the basic process. So we need to understand why we are having this type of standard. So then, as I mentioned previously, there are standards because if people are playing around that information, if they are giving kind of a different information to the market, so then it will create kind of a complexity to do the comparison. If it is so, we are having a standard. That's why we are having a standard. So then it's obviously in this area, maybe having more complexity as a comparison. That's why we are having a guideline. Do this way, identify reportable segment this way. Don't disclose each and every operating segment in the books. This is the way you have to follow. There's a clear guideline. So then, as an accountant, we need to follow this thing. That's important. Then why we need to disclose this? That is useful information. Segments for the P&L, for the balance sheet, we are giving segments. In a company, we may have different products. If it is a service company, it is a manufacturing company, or hybrid company, you may have servicing plus manufacturing, right? So then, whatever the products you have, you need to give kind of a separate P&L, separate balance sheet for that production. So then, in an organization, you may have different operating units because identified by the CEO. Standard can CEO කියලා. Standard can CPMO කියලා. කියන්නේ මොකද්ද? CODM. Results are regularly reviewed by the CODM, Chief Operating Decision Maker. Means the CEO. Chief Operating Decision Makers have identified what are the operating segments. Take decisions, evaluate KPIs, giving targets to monitoring purpose. We are having operating segments. For production purpose, we are having operating segments. As operating segment, we should have separately identified KPIs, production, cost elements. To do kind of a management decisions, we are having different units in an organization. Different production, that is called operating segments. So as operating segment, we are having three characteristics. The results are regularly reviewed by CODM and then earned revenues and income expenses. Earned revenues and income expenses. It is not a marketing department. It is not a finance department. It's a separate earning unit. Right? discrete financial information is available. So then separate financial information can be captured from the financial records for that particular segment. That's all about the operating segment. In organization, let's say you are doing a manufacturing company, you do soap, perfume, and then shampoo, and some cosmetic conditioners, and then some other cosmetic items, right? So then you have several production, plus sanitizer, different production. So you are having different segments, right? It may be one item may be soap, one item may be toothpaste, one item may be perfume, right? So then different segment. So then you should earn revenue. You should have kind of a mechanism to evaluate the expenses, and plus you should have separate information for both units. And then results performance should be evaluated by the CEO quarterly. Not partly, very frequently should be evaluated. Those are the operating segments. Whatever the organization you are getting, you may have different operating segments. If it is a hospital, you are having different ones. OPD, and then operations, laboratory, and some other shops are there, and then operations, different pharmacy, right? Lab and the pharmacy, two different income sources. You should have two different modules. In a bank, you may have segments. What are they? You may have lease, loan, gold loan, and different aspects. Likewise, according to your organization, you should decide what are the operating segments, right? To identify the operating segments, after analyzing, what you have to do is you can you have aggregation criteria. You can aggregate some of the operating segment. You no need to disclose each and every item in the financial statement. නේද? ඔයා toothpaste revenue එකක් කියලා ඊට පස්සේ shampoo කියලා සබනුත් කියලා නේද? නේද? මොනවද හැමදේම disclose කරන financials වල. දැන් but we kind of a dairy manufacturing company. You are prepared. We are producing yogurt and fresh milk and then cheese and ඒවා තමයි produce කරන්නේ. आता products හදනවා. වාගේ income statement එක හැමදේම දෙනවා. ක්‍රීඩෝපි ඉඳලා දෙනවා. coffee ඉඳලා දෙනවා. ice cream, yogurt, whatever the yogurt you have flavors, right? And then you have kind of a strawberry and then chocolate and different flavors. You are going to do financials for different flavors actually. No need, right? So then you have to have kind of a mechanism to summarize that. That's called aggregation criteria. Aggregation provides financial statement users with information that allows them to evaluate the business and the environment in which it operates. They have similar economic characteristics. According to that similar economic characteristics, you can aggregate some of the operating segments. Segment, benefit. What's the benefit we are giving to users? What's the benefit? What are the segments? What's the benefit to the stakeholders to have segment information? What's the benefit? Take a look. Quite answer. If I narrow down over there, to get sharp decision about what you have to decide what the exact segment you are getting profitable. If they are having kind of unprofitable segment, loss-making segment, in advance you should know that. Otherwise, all the things will be accumulated, and finally you can see a profit. But there are hidden loss-making segments. You have to identify those, and you have to take decisions over there. That's the core area you have to take decisions. That's why we need to have segmental information. What segment? The higher, the higher data is loss-making, not paying anything. Then, that data got good. සේරම කට්ටියගේ ලක්ෂණ වර්ගයෙන් බලුවොත් ඇවරේජ් එක 80 වෙනවා. 80 වලින් අපිට බලන්න පුළුවන් ළමයින් quality එක බෑ. high performance තමයි 95 වල ඇති. හැබැයි අපත සෙට් එකේ අපි බලන්න individual ඉන්නවා බලන්න. segment wise බලන්න. So then need to take sharp decisions based on the segmental information. Well, that's why it's the importance of that, right? That's a requirement. So annual report marking was a segmental information to that. Weightage එකක්. Segmental information වලින් ගොඩක් information එළියට යනවා. නේද? Products margin එක යාලා. දැන් අපි නිකම් product series එකක් තියෙනවා නම් from the P&L they can get the gross margin, right? If you are giving segmental information, they can calculate the product-wise gross margin. Product-wise gross margin means from the market they can get the sales. If you have the margin, you can calculate the cost. By calculating cost, they can take decisions. They can benchmark if there's a competitor. So the next company, this product margin is this. We need to target that. So likewise, competitors can use this segmental information for their business perspective. That's why people are not willing to give segmental information to the listed companies. No, that's kind of a very confidential information. That's the requirement. You can qualify your financials audit report if you don't have segmental information, right? Okay. So then this is the process basically. This is the process. Can't see, operating segment and then business activities reviewed by the CEO and then aggregation criteria. What are the, how can we aggregate this? And then quantitative threshold and then reportable segment. We have set of operating segments. We have set of operating segments. We have, here we are planning to do aggregation criteria. Based on the criteria, we are going to aggregate that. We had operating segment, 20 operating segments. To 20 operating segments, we aggregated that to 10 operating segments. 10 accumulated segments by combining all the businesses. And by what ice cream tiring combine කරන්න බෑ. සමහර කට්ටිය එහෙමත් කරනවා. වාගේ කම්පැනි එකේ ice cream උත් හදනවා නම් tire උත් manufacture කරනවා නම් ඒ දෙක application criteria කියලා දාන්න බෑ customers වලට විකුණන්න. If it is kind of a similar product, you can cluster whatever the sanitizer, perfume and some other fragrance, right? And then conditioner, shampoo, soap, and some other thing, right? One reportable segment. Likewise, you can combine. Yes. So then, after having this 10, the next step is you need to evaluate the quantitative threshold. Quantitative threshold. What you have to do is you have to compare with this quantitative threshold. This is the core concept in this standard. Quantitative thresholds. We have 4 quantitative thresholds. 4. That's the learning outcome. මේක තමයි exam එකේ අනිවාර්යයෙන්ම තියෙන ප්‍රශ්න. මොකද? But the exact question we can see from the examiner perspective. Once you are identifying your reportable segment from operating segment, what are the quantitative threshold you need to follow? That is the question will be tested in the exam. Quantitative threshold. So then we have 4 quantitative benchmark to evaluate the segments. That's what mentioned here. හරියටම මේ exam එකේ test කරන දේ කියනකොට තමයි sound එකේ. That's good. Giving indication that, right? Good. So these are the 4 quantitative thresholds. 10% of revenue, 10% of profit or loss, 10% of asset, 75% of external revenue. These are the 4 quantitative thresholds as the standard. 4 quantitative thresholds. 4 quantitative thresholds. You have to evaluate based on this, right? This is the description. Reported revenue is 10% or more of the combined revenue of all operating segments. Right? If it is so, it's a operating segment. The quantitative threshold, we have 4, right? 4 quantitative threshold. We need to comply with only one threshold to identify a reportable segment. This is important. Operating segments that do not meet any of the quantitative threshold may be considered a reportable segment, reportable and separately disclosed if management believes that information about segment would be useful to users of the financial asset. That's another thing. So then I want to highlight that. If you want, I want to highlight that. You are having quantitative threshold, right? Quantitative threshold. 4 criteria. 4 criteria are there. So then once you are identifying reportable segment, we need to comply with only one criteria. If it is more than 10% of total assets, it's a reportable segment. If it is more than 10% of profitability, it's a reportable segment. What I am discussing here? So we have an organization having profitability 4 million, total asset 2 million, total asset 2 million, and then revenue 8 million. 8 million revenue, 2 million total assets, 4 million profit, right? What we are going to do is you have 10 accumulated operating segment. Based on the aggregation criteria, you had 20 operating segments. You accumulated it to 10. What you are going to do is you are divided into 10 now. 1, 2, 3, 4, 5. So then, as a whole, you are calculating for one, how many? 2%, 6%, 4% from total asset. How much of this? From total revenue, how much of this? Likewise, what you have to do is you have to evaluate this analysis. You have to evaluate this, and you can achieve one criteria, 10%. Let's say 10%. 10% here. It's a reportable segment. It's a reportable segment. The learning outcome is to be a reportable segment. We need to achieve. We need to pass only one criteria from 4 criteria, right? We have 4 criteria. What's that? From revenue, from total assets, from profitability, and external revenue. 75% of external revenue. So then 75% of external revenue, bit complex to understand. That will be discussed next week. And other 3, very straightforward. 10% of your total asset, revenue, as well as profitability. Profitability means you may have a loss, right? You need to get the absolute number, not the. You can't say that loss is a negative value. You are going to deduct that. No. So then you are having a loss. Let's say your total profit 4 million. From 4 million, you are having a loss like 1 million loss in the profit in one sector. It's a reportable segment because it's a significant loss. Right? If you are getting, let's say, loss minus 1 million, your total profit positive 1 million. 1 divided by 4, 25% loss. 25% loss means minus 25. Why? You put minus for the loss. Minus 25, you define like 10%. Positive 10% is it 25% negative percentage. Don't get this negative value. Get the absolute value. I hope you got it what I am telling, right? So then once you are getting your profitability and loss, don't depend on this negative positive values. Get the number, absolute number, and calculate the percentage. And then if you are getting 25% loss, it is not a negative 25%. Negative 25% is less than the 10%, right? That's the basic logic. But don't consider this negative mark. That's not a requirement, right? So then the basic understanding is, if you have a company, for decision making purpose, you are having different operating segments. Right? As an accountant, you don't need to report all those operating segments in the financial statement. You have to decide what are the reportable segments. To do that, you have 2 things to do. What are they? First one, aggregation criteria. According to aggregation criteria, you can merge some of the operating segments. Second step, after evaluating all those merged operating segments, evaluate with the quantitative threshold and decide what are the reportable segments. That is your duty. Identification of the reportable segment according to the quantitative threshold. That is the requirement of the standard. That will be highly tested in the exam. That's high probability of taking the exams. Right? So that's it for today. So then I think 50-60% of segmental reporting is discussed. So then we will Then that's it for today. So then next week, the main part of the statement reporting, I will do some of the statement with that. And then we start then I hope you participation. Very critical things you are discussing. So then we have a good progression. So then unfortunately last week we didn't do anything. So that's a big loss. Need to power everything, right? Perfect. So then if we can save time, we can do more. Standards are not that much easy. Consolidation 16, 16, 9. We need to discuss in detail. So then if we have time, we can do more, exercises and practical examples. Then that's the whole purpose. You can utilize this time better. That's the expectation. So then hope your positive contribution. Till then, that's it for today.